We're an alternative asset management company. So in the market, you would have seen mutual fund asset management companies. We manage alternative funds. In India, they are constituted as AIFs. We also manage funds abroad. We are a country operating in multiple countries, but we're headquartered in India. For our flagship strategy, we are currently on Fund 4. And the value drivers for the business are committed capital. The value drivers are the performance fee, which is carried interest and sponsor gain. And a very big value driver is the structure. We have a unique structure in which 100% of the management fee, 100% of the sponsor gain and carried interest comes to the AMC. We're a 22-year-old business, so our funds have matured. And we believe we've become increasingly predictable, which is evident in our trends over the last 2 years.
Interesting. It's we've seen asset management companies having AIF businesses, but you are an AIF company coming, and so we need to understand a bit more about your company's metrics. Give us a sense of the revenue model that you have. How do you get revenue? How do you recognize revenues? And what is the normal tenure of the funds that you manage?
Indeed. So first of all, we follow India's principles. And the business of the company is raising and managing alternative funds. From each fund, we derive 3 income streams. Management fee, which is on committed capital, which is recognized on a quarterly basis. There is sponsor gain, which is the accretion on the sponsor's contribution into the funds, which is again recognized on a quarterly basis. And behind this are the regulator has prescribed principles on how we should value assets based on international IPEV principles, as they said. And the third is carried interest, and I'll simplify that for our viewers. It is a share of profits that the AMC earns on managing its funds. These are usually back-ended, but for a 22-year-old business, they've become front-ended. So these are the income streams. We also have some income from the balance sheet because we have a strong balance sheet. And then there is the expense layer, and the expense layer is largely people. So if you take A, which is our income streams, you will see that they are fairly modelable and predictable, and they follow globally recognized principles on recognition. We focus on realization, not accretion. And if you look at the expenses, you will see that they've been growing in a way that gives us operating leverage. So based on this, March 26, our profits were approximately 82 crores. March 25, our profits were approximately 62 crores.
Interesting. Let me dwell a little more on it. And correct me if I'm wrong, because it's a learning curve for me as well to understand an AF functioning. So your management fees is something which is constant and it comes on a quarterly basis. Your sponsor gain and carried interest. Sponsor gain, as you said, it's the kind of gain which your portfolio is sitting on. So is there a mark-to-market that impact comes in sponsor gain? And when you say carried interest is towards the end of the tenure of the fund. And for a matured company like you, it would be a consistent, given that you have good track record now for 20 odd years. Correct me, what is the kind of mark-to-market impact that could be seen for you?
You are broadly right. Again, I would say we are not taking an AIF public. We are taking a manager of AIFs public. It's very important to understand that because AIFs pay fee, whereas the manager receives fee, right? The AIF pays a carried interest to the manager receives that carried interest. You're broadly correct. As far as mark-to-market is concerned, given the principles we follow and given the conservatism we have, we are generally trying to avoid ups and downs as far as underlying asset valuations are concerned. And what happens is over a period of time, in our case it's 22 years, multiple funds, the mark-to-market, which is not a choice for us, it's an obligation given Ind AS, becomes fairly smooth. Because remember, the manager is managing many funds and each of the funds has multiple assets. So therefore you can see it's a very diversified underlying asset base that, let's say, the AMC is managing.